where we needed to go. So if I don't address something in your budget format, please let me know. Ask the question. It'll be informative for us all. I've called this the tale of two budgets for a very long time because you really have to think of it that way. This session, we're focusing on what you need for your library. It's the complete budget. It's all the pieces, because you don't have to give all the pieces all the time to your entity. It just sort of depends on what they want. Yeah, it's kind of like show me the money. I actually had to do this. I won't tell you. Syrup is really bad on dollar bills. It wasn't 20s, but I've actually had to hang money up to dry. I had, when my kids were small, Alex poured syrup over his billfold, and he had, 4 ones. It was a catastrophe. Anyway, so this always makes me think of that. The big thing we're going to start with is who does what, because I'm not sure. I want to make sure I'm going to give you best practice or what I think, and if it's different in your library, tell me. Let's have a discussion about it. So who does what? You're the director. You're the new director. And a lot of times what you're walking into is a situation where your board is going to make darn sure whatever really annoyed them about the last director that they might have dearly loved, whatever annoyed them, they're going to try to really hone in on that and change the direction. So I wanted to give you my perspective on what your job is. So you have to keep this library board informed. They can't do policy, they can't think big picture if you don't give them enough baseline information for them to go to that next level. I think you're in charge of drafting a budget, which is why you have to have access to all the financial information. You can't be kept out of it because you're going to have to think about it as you get ready to draft this 2019 budget. After you get a draft, then you could bring in the treasurer if they want to have first discussion, and some treasurers do, some board chairs do. And then it goes to the group. I'm not saying you're in charge of making all the decisions here, but you have to give them a starting place and some of the reasoning behind why. Every month, when you give the board the financial statements, you have to be able to provide trends that you see. If you see utility costs have shot through the roof, you need to start to give the board perspective. We're going to go into air conditioning season. We're going into heating season, whatever. Keep those monthly expenditures. You don't have to bore them to tears, but give them the big picture on these items. And those financial reports have really got to be clear and concise reports. I didn't put it in this session, but I'm going to put up some examples of what I consider a clear and concise report, and I'll try to put some information about why I think so. That's deep mining material I'll stick up for each of you as you go through the class. So the library board, they need to know what's going on. They need to know about that problem patron. If you've got concerns that are happening, friction between the kids that show up after school and the guys that want to read the newspaper about 3:30. They have all day, but why they pick 3:30, I don't know. But they do sometimes. they're going to review, revise, and approve the draft budget. And you're going to go back at this point in time, you're going to take this back to the strategic plan, which I hope you've kept in mind when you developed it. But your strategic plan, any surveys you have going, any trends that you see, you need to give all that information to them so that they can make the best financing decision based on their policies and planning documents. They approve the monthly expenditures. Do all of you meet monthly? Does anyone meet less than monthly? Nikita?
I think Nikita mentioned at the retreat that she hadn't yet met with her board.
So Nikita's board, and they reminded me that I had informed them of this very same thing in 2011, and that they were going to continue meeting quarterly. I don't know that Nikita was able to convince them otherwise.
And then Nikita also says she had 4 show up last time, so she hasn't had a quorum meeting.
Ooh, ouch. That hurts.
Everybody else seems to be saying monthly.
Okay, that's good. Your board can say we don't want any bills paid for that aren't approved at a meeting. I've had boards that do that. I try to get a board, you to talk to your board about issuing approval to issue checks that need to be distributed between board meetings. Seems like utility bills and phone bills and a lot of things need paid before your regular board meeting. To say nothing of if you have monthly board meetings and you have bi-monthly or bi-weekly, semi-monthly payroll, there's a payroll that isn't at a board meeting usually. So Carol will cover this. I call that a standing motion. You just need a motion in the minutes that says that, or you can make it in resolution format that says that we authorize, with the approval of the people that sign the checks, which of course are the president and secretary, that the treasurer signed off on, that the checks can be issued between board meetings and will be approved officially at the next board meeting. That goes in that permanent file, so you can find this 20 years from now. Doesn't have to happen every month, but yeah. They need to have a list of all the checks that got written between board meetings, you know, and at the board meeting, but that's their job to approve. And they review and approve the monthly financials. And a lot of times, there are 2 extremes. You get the ones that want to pick every check about, now what books did you order from Baker and Taylor? Just exactly what were the titles? We talked about that at retreat. That's too much information for them. That's your job. I know it's hard to back it up, but if you start with the idea of their big picture and you work the detail, it'll work a lot better for you as you go along. So shared responsibilities. If you only have short-term goals, everything is a crisis. If you only have long-term goals, you have a lot of crises because things creep up on you. So you really need to have a balance of things that we need to do in the short term and things we need to do in the long term. Together, you present the budget to your local entity. And I know we have 2 county libraries here and we have a district. The district library actually only has to present it to their board because they don't have it ready at their annual meeting in March. The counties, I'm sure, have to get present it to their county. If I've misspoken in any way, stop me now. But the key there is the shared responsibility. I look at your job as getting them ready to look good. And they should be the board. Doesn't have to be the board chair if they're terminally shy and it's not going to work. Whoever on the board is tasked with presenting the information, make sure they have all the information, not just numbers, but stories and whatever. You're there to backstop and help answer questions, but do you all have your board chair report to your entity? Yes? Or do you know yet? Anybody? If you don't know, this is a topic of conversation between now and when you have to go to your city.
There are a couple of yeses, but many more don't knows.
Well, it ought to be a topic of the May board meeting for sure, if you haven't already had to take it to your city. And maybe this year you do it, but anything that comes from what they view as the top employee at the library, and you're talking about the expenses, they're going to look at it and go, yeah, you're just trying to pad your job, your take-home pay. And that's not true. If it is, you'd have a lot better budget than you've got in most cases. You have legal basis for this. And I'm going to talk here in just a minute about these statutes. These are the basic ones that you need to make sure you understand. And I'm going to show you here in a minute where to go. But take the time. They aren't quick reads necessarily, but read through it and think about what it says so that you have an understanding of what's being asked and how these things are coming about. We have here that very long link there. If you just Google Kansas legislature, it will take you to a link. Then you would click over here on the left-hand side there where it says statute in the little box over by the dome. I click statute there. Then that brings up a whole list of what they call chapters. So we are in chapter 12. And when you click chapter 12, then there are all these articles or sections within chapter 12, which is municipalities. And then you're going to click 12 again, which is the library section. And then you start going through, it'll open up, and there are a whole bunch of them that you can choose. But if you go back to the previous slide, I'm going to suggest you make a point to look at these three. 1220, 1225, and 1226. So here's what is really important in this very first statute, where it talks about getting a library established. And after the election and you've gotten elected, then it says, when it says the governing body, in this statute, that's referring to the type of library you are. If it's a city, that's a city governing body. If it's a township, it's a township governing body. If it's a county, it's a, et cetera, et cetera. The governing body, now if you're a district, it is your board that's the governing body, and you're out by your lonesome. But it's the governing body shall forthwith establish a library and is hereby authorized to and shall annually levy a tax. You notice it doesn't say argue about it, override what's presented to you, ignore what's given to you. It's very clear that the governing entity shall levy a tax. And then the key part of this next piece of the sentence is, in such sum as the library board shall determine within the limitations fixed by law.
We do have a question. Darren wants to know if there's a consolidated PDF of all the chapters. I know each statute has a little PDF signal, but
We could probably put one together and put that up. That would be something good to put up on the system's website, actually, is the actual statutory chapter for libraries.
mm-hmm.
So for the consultants listening, hello. That's not a bad idea.
Carol says, check your library for a notebook of statutes.
They usually do have that as well. However, I would say in most cases it has not changed, but you have to realize that that statute is only as current as the current legislative session. If something. Say what?
It looks like this.
I can't.
Oh,
Can you
who's?
see?
Oh, Carol's. Oh, okay. Carol's showing, if you guys can see Carol's screen, she is showing the notebook of the statutes. You might have
The
to.
library handed them out a number of years ago. But
Oh yeah, that's
still
that. Yeah, that's actually was old when I got there.
But it's still valid. It still has
Well,
all
it's true. It does. It does, and they have not changed for the most part. But we could put we could scan that if nothing else and put it up online, so it could be accessed digitally rather than go here. I will say you have to be really careful when you go out on the legislature. If you just Google a specific statute, you have to make sure it opens up in the current statute year, legislative year, because you can get really exercised about a change if you open the 2014, if it's a screenshot from 2014 or 2012. Just make sure that you're in the current legislative session and the statute, and then you're in the most recent statutes. That's, things will come up on censorship, schools. You'll see a lot of things that we let you know about what the legislature's thinking about, because in some years they have much more time to run amok than they've had this year so far. I guess you can record that. Anyway, there are some years where we really want you to pay attention to proposed legislation. Hasn't been as much this year. Anybody have any questions on those statutes? I'm sure Carol is going to go through all of that when you get into library law. But I wanted you to look at this because this is foundational for your budget. It doesn't say that the governing board has the authority. Now, I will tell you, even if you have a charter ordinance in place that puts a cap on the amount of tax income you can receive, a mill cap, it's still the library board's responsibility to develop the budget for them to levy up to that mill cap. So you may come in with a budget that's right at the mill cap or slightly below, but it's your board's choice. It's not their choice. This all has to be done extremely tactfully. I'm not saying stomp in there in your boots and say, hey, you can't do that. You're going to have to take cookies and, you're going to have to change habits if they're not been this way, slowly but and surely, by having relationships and conversations with the city manager. And your system can help you immeasurably in helping to get to a copacetic relationship. But your library board determines the budget based on what your planning documents show is needed in the community. Okay. I think we all know that the state fiscal year runs July 1st to June 30th. So fiscal year 2019 starts for the state on July 1st of this year. You have a calendar year, fiscal year. Every other unit of government below the state has a calendar year, fiscal year, January 1 to December 31st. Your E-rate income comes in based on the same calendar year as the state, July 1st to June 30th. So as you work through your E-rate income, it's always based on half of one year and half of another, which is kind of annoying. The federal government runs October 1st to September 30th, just to be even more confusing. But you're lucky, it's a calendar year. In Kansas, we do cash basis or cash accounting. That means the money isn't received until it's in the bank. The checks, the expenses don't happen until the check is written. So if you have a $500 book order, it's not an expense until you pay Baker and Taylor for it, or whoever. It's the simplest form of accounting. Most of you that have a more complicated accounting system run what would be called modified cash accounting or modified accrual accounting. But what this really means for you in terms of finance, now this is not strictly training you on how to do a budget, but what this means in terms of finance is that when the taxes for payroll are due, they're due in the month of the check. You're not a business. The IRS will let people pay people in April and say, you have to get the income to me by May 15th. And the state says the same thing. But your cash basis, and you should pay April's payroll taxes in April. And you could get away with doing the legality for most of the year of going to the 15th of the following month. But in December, it needs to happen in December. So it's in the same year that the expense was incurred. So I think it's a good habit. And we can talk more about that. But pay the payroll taxes right after you pay the payroll. Or that's the next thing you do is figure your taxes and get out online and pay them. Fund accounting really is something that's important for those that have more than one type of money. Think of colors. If you have all of you have a general fund. Some of you have a legally established employee benefit fund. Most of you that don't are paying your employee benefits out of your general fund, okay? Some of you have a legally established capital improvement fund. Some of you do not. Some of you have had the great good fortune to have memorial or endowment funds, which are technically part of your general fund, but are restricted accounts. And usually you'd put them in a different column under the heading general. Any of this stuff that doesn't make sense to you, send me an email. I'll try to shoot you more examples. I just want you to understand what these things are. carryover. We're going to talk about that in just a minute, so I'm going to move past that. You're going to hear all these things. We have, and I've put up, I think Robin made sure it went up, is the gap waivers up. I saw your eyes. But on the Apple website, we have what's called a gap waiver. Because we don't do generally accepted accounting practices, which is accrual bookkeeping, your cash basis. And so the waiver says all our financials are going to be presented on a cash basis. It's something your board approves annually, and it just goes in your minute book. It's something you keep track of along with your civil, like when you do the state statistics, you're approving the civil rights certificate within the state statistics. I usually copy that out and have the board actually approve it, because when you do the annual state statistics, that's you filling it out. And usually I say, go ahead and make your board be aware they're approving that. We can talk debits and credits and assets and liabilities, but it would make a lot of you cross your eyes, roll back in your head, you'd pass out and get really, really bored. But if you want to talk about T diagrams and true double entry bookkeeping, we can sure go there, but I don't for the most part in this class. Other things to know. I talked about all these cash basis, modified, accrual, full accrual. That's taking full accrual takes assets and depreciates them. You do not have to do that on cash basis. So you don't take the office furniture you bought and depreciate it out over a 3, 5, or 7 year time. You expense it at the time you purchase it. I would say you still need a list of these things so that when the building burns down, you've got an insurance list. But you're not depreciating that asset for most of you. Now, Darren and others are going to have to work out what their county wants, but the bigger the library, they're going to have some asset depreciation for their entity that their entity wants to keep track of. So they'll take your cash basis information and ask you on equipment for other things. I'm aware of that. I've identified the different kinds of funds on here. So if you hear people talk about CIF, that's the Capital Improvement Fund. And Employee Benefits Fund is the one that's most confusing. Because when you do payroll, you have employer match on Social Security and Medicare. You have unemployment tax. You have withholding compensation insurance. Those are benefits. And most of you pay them out of your general fund. There is a mechanism to create an employee benefit fund that has its own levy. And I noticed in the information you sent, some of you do have that. So we're moving, the other thing I need to say here is if you have a charter ordinance, it never limits your employee benefit fund. It only caps your general fund. Any questions on any of that? All right, types of budgets. Most common and what you all gave me were line item budgets. And there's a good reason why most of you do it. It's the most common, it's the easiest to prepare, yes.
There was a question actually came in. Should workman's comp insurance come from general or employee benefits?
I would say employee benefits. Very definitely. Most of you took the standard wording on the employee benefit resolution, and those are particularly broad-based because what gets put in there as a descriptor is the only thing you can take out of there. So yeah, it comes out of your benefits levy. Hope that helps. Okay, so we're going to talk line item. Here again, we go back to long and short-term goals. It's important to think about this because you've got to be able to have something to base your decisions on in the now and in the future. Does this, you know, that's where you're going to be able to refuse the bus when somebody wants to give you a bus to make a bookmobile out of. Or the tanning bed that came from the skit you saw it at the retreat. If you don't have a strategic plan and goals, it gets harder to say no to some things. All right, this is the actual laws that govern cash basis. You can't spend more tax money than you have authorized in your tax budget. You can spend any other kind of money you get. So if you get a grant or you take in more fines and fee money, you get memorials, you can spend those in a year. The limiter when we talk expenditure authority next session is really driven by the you can't spend more tax money than you get in your tax budget. And we'll come back to that in a little bit. Unfortunately, what you're doing is perpetual. It is now part of your life as a library director. I'm just really sorry to say, but you're consciously dealing with the budget. You're planning it and putting it together for the next year and presenting it. At the same time, you're managing the one that you have on hand, and you're adjusting it, and at the end of the year you're evaluating the one you're just finishing, and you're revising a little bit the one you're getting ready to start. It's a perpetual circle, and you just have to think. You can't walk away and say, oh, I'm done with budget planning, because it's every month as you look at what you're spending money on, how you're, a budget is your best guess, but it's also something you measure back to. So know what that means to you. I put this up here because this is legally when your entity has the money. And let me tell you, almost all your entities have the money way before these dates. So your taxes are distributed at the county level to the other subdivisions of the state by the 20th, by the March 20th, by June 5th. And there is really, to me, if you're not getting tax money in January, the question becomes why. If you're not getting tax money in March, it's a conversation. It ties to when your governing body meets. Technically, they could cut this check without having, because it's not their money. It has nothing to do with them. But they tend to want to run it through the meeting where they pay the bills. So, but you want to see if you can't get this as soon as they get it. And that's a conversation, that's a long-term conversation. But as you can see, this is the last day that it's, the county has to kick it out the door. And I can tell you, most counties have this out the door between the 10th and the 15th of a month, that it's due on the 20th. And a lot of them, you'll get that big tax distribution in June. Now, you need to know these dates, because then what you should start to do when you analyze is how much tax money do I normally get in these distributions? So you know about where you are in your income timeline. State grant and aid comes either as I don't know if they do checks anymore. I think you should all be on automatic ACH to your bank account. They were really trying to do that. If you get a check in the mail from the state, talk to Megan Schultz about getting set up on ACH, because there's no reason they can't do that. They're doing it for everybody else. System grants, you know when those time schedules are. It varies by system. So, budget planning 101. It's a year-round exercise. You're attempting to set this standard of operation. You can't make a responsible decision without the right information. And you have to approach this correctly. It's not a cost reduction program. It is not meant to see, well, how little can I spend to get what I want to get done? You know, you can waste a lot of time making sure you take 10 cents off a budget. Know that it's not written in stone. If you get a huge grant, you're going to spend more than you originally published, but you're just not going to spend more tax money. So I've given timelines, and these may go up as the new tax law comes into play more and more. But in January through April, you should be getting your prior year's annual report out. You should have your prior year financials as a background, and you're starting to have conversations about what are we doing we can quit, what are we not doing we need to do. All sorts of discussion like this. So somewhere in the May to June, how many of you have already met with your governing entity? Anybody? I can't see everybody.
This is a good time to raise your hand. Darren says that they'll meet in June. Jessica, Stephanie both say no. Nikita says no. So.
Yeah, well, you're probably not going to, most of you, I'm guessing, are still going to talk to your entity in May or June.
Yeah, that's what it looks like.
So this is now the key time to get your act together. The story, what you're going to do for presenting. They have to publish. And there was some concern about having to publish by the end of June in case they had to go to election. But I think most of the counties and cities, townships were not impacted and neither were districts, but townships and cities found out that the townships and cities had a lot of leverage and side pockets they could take money out of, and the odds of them going to election were slim to none, in my personal opinion, based on what I saw going on last year. The key step most of you need to remember that doesn't happen is you need to revisit this budget in November and December toward the end of the year for final approval for the next year, because you'll have an even better handle on how much am I spending, what's my carryover. You can't get more tax money, but you can revise how that budget looks in terms of actuality. You may know about a grant. You may have better handle on discretionary income. So that November, December piece is really important. Get that final review of what you've got. I put in here the steps for a district library because they're virtually the same. The difference is, baby, you're on your own. So you have to do a really good job of determining how much, money you want, because when the air conditioner shoots craps, you've got yourself. There's no other entity to go say, could you help us out just one time? You don't have any other alternative. So, and you're the one that has to get that budget published. You're the one that has the budget hearing, and you're the one that turns it over to the county.
Now, Stephanie from Cedarville says that her budget is not published. The city told me it was not necessary. She's assuming that's false. Is Cedarville a district?
I don't know. I was just going to. I think you're a city.
No, it's a city. Okay.
You're a city. So You give them, and we're going to talk about this, like I said, this will all become clear as mud shortly. You give them your information and they put it on their budget. But if you're a district, and who do we have? Do we not have? Yes, we do. Plains is a district. They have to do this themselves. So they're in charge of their own money, but they're also in charge of their own money. If you get what I mean, they have to do this themselves. A lot of times the county clerk will help. Other two steps there. So this is what you need. You look at last year, this year, and next year. And this is more blah, blah, blah. I'm going to have you go back and read these things and think about them. I'm not going to read the bulletin. I do think it's important. Now, when you start doing budget planning, and all of you look like you're in varying degrees of this, and some of you approach it this way, it looks like. There are some things I noticed I wanted to make sure you understood. On payroll, you notice I have salaries, wages, I don't care what you want to call that. That's what the employee takes home, cashes, and eats on for the next month. Payroll taxes are the library parts, the matches that you're responsible for sending in, along with the stuff you suck out of the employee's check to the government's entities. And then there's unemployment compensation, or SUI, state unemployment insurance. Actually, Kansas calls it state employment insurance, and workers' compensation. Those are benefits. When I see salaries, I don't see a good benefits accounting. Now, some of you had a separate fund and accounted for it there, and I know you understand this. Make sure you're figuring out this benefits piece, because it sucks some serious money out of your budget if you're not accounting for it. And you're only doing gross. But that, when I say salaries or wages, I'm talking not what the employee takes home in their paycheck. I'm talking gross salary. So if they make $10 an hour and they work 20 hours a week times 52, that's the salary for that person in a year. Prior year is actual, what you put in. I think you ought to look at this in at least this 3-year format when you're planning a budget. So your first job is to fill in the prior year column. What was last year's ending totals on all these expenses? You get that prior year filled in, and you go ahead and fill in what got approved for this current year. And then I want you to take a minute, and this is where you start rubbing a crystal ball, and you start saying, what trends do I see? What can I quit doing? What am I not doing? And where does it fit in my categories? Do I need to add an expense category? You know, this is where you start having the extra conversation with yourself, and people start asking you to shut the door in your office if you're lucky enough to have one, and otherwise they look at you strange as they run by in a real hurry. Because when you're thinking budget, you get a certain kind of cranky frown on your face. You just can't. I want you to laugh and smile and take deep breaths and enjoy this, but sometimes it's just, you know, oh God, we need this and we need that. So have a good conversation here when you're doing proposed. And we're not talking income yet. You understand that? We're only looking right now at expense. Okay? Start with expense. Dream in Technicolor. Don't dream in black and white. Think here, because you will go back and change this and revise it based on income. So.
Okay. Darren has a question about if they've got a separate employee benefit budget and wanted to develop a plan to pay for an MLS or other formal education, can that come from employee benefits, or does it have to come from the general fund?
I would go back to the resolution that formed your employee benefits. And if it was stated broadly enough, perhaps you may have to pay that out of your general fund. You have to go back to the resolution. And that's why when we tell you when you create an employee benefits fund, you want to make the broadest statements. You don't want to say, just cover, only medical insurance. We're only going to cover this. We're only going to cover Social Security and government mandated benefits. You don't say it that narrowly. Go back and look at the information we have up online at the system's website that talks about an employee benefit fund and how the wording should be. I mean, at least that's my take on that. It's possible you could do employee education out of the employee benefit fund depending on the wording of that resolution. Now, carryover. In the very, very simplest terms, it's the money you have in the bank that isn't restricted for another purpose. So if you have a capital improvement fund, you can determine carryover of it, but it's not what's going to go on your budget document right away. The big thing here are going to be the carryover in the general fund and if you have an employee benefit fund. But it can be all different kinds of money. Checking account, savings account. You could have 1 or 2 or 3 CDs. If they're not capital improvement fund, they're part of the general fund. So carryover is something that you're going to have to work through. And it looks sort of like this on the simplest level. So if you notice, it varies every year because it's really the money you have in the bank. And the example I gave you here is in 2017, they didn't have hardly enough to get through a month. And that is a no-no.
Stephanie from Cedar Vale says they have a money market account. It's not designated for anything. Is that part of the general fund?
Yes, ma'am.
Okay.
Yes, ma'am. It is. It is. And it's okay to have money you would get investments of, and you should have investments, but it's all part of the actual carryover you have. The other part of this lecture that I always say is spend every dime of your tax money. You carry over other types of money, fines, fees, your system grant, money you got from your system. You spend your state aid and you spend your tax dollars every year. All of them. Now you're spending ahead on your tax income, but when you're sorting it out, if you got $60,000 in property tax, you spent that, by golly. So what got carried over in that $10,000 here was money that came up in the white area, not the money in the yellow area on this form.
Okay, and then there's, it looks like a couple of questions about that. Sammy wants to know, what about a savings account? And Darren says, except you have a capital expenditure fund where the carryover goes, with a question.
Okay, well, you can have, I'll show you, you can have carryover in a capital improvement fund as well.
Okay.
You're going to have carryover in all your different kinds of funds. But in this case, this is just for people that only have a general fund, this example. I have some things I'll show you here in just a second, but you notice that I have a blue square for property tax, and I have yellow squares over in 2019 or the proposed year, because what I'm going to tell you to do, because you usually don't get this information from your city in time to have it useful, is I'm going to tell you to take what was published in the budget in the current year's budget, so in this case 2018, and round it up a little, because or leave it at least the same. Look at what you got in 2017 for actual, or the prior year for actual. Look at what's on your budget for 2018 and do what's comfortable, but don't do anything less than what the prior year actual money you put in the bank is. Because property taxes on vehicles may stay stagnant or increase very slowly, but it tends to at least stay, you know, most often, unless it's a major recession, most often it stays the same or increases slightly. And the last 2 years, it's been going over estimate for me. So I'm assuming it is on your city budgets as well. So you can do this much without knowing for sure what because the county clerk gives those estimates to the city. The city could split that out for you, but I'm guessing in most cases the city or township does not. If you're a district, you're going to get these estimates directly sent to you. Okay? So when you get all done, you've got a budget that starts with carryover. You've got all your income sources thought out to get total cash available, and you've worked through your expenses. You look at this blue spot up here, and down at the very bottom, you'll see that it says it was a negative $55,000, $573.31. That just means you need at least that much property tax to break even and have no money in the bank at the end of the year. Not a good idea. You need at least a month and a half to 2 months of carry, because a lot of times you don't get your tax money till February. And you have to pay people and pay bills between now and then. So you're solving for the blue square. It isn't blue in real, pink, orange, lime green, I don't care. You're solving for X. This is the X on the state budget form that we're going to talk about next time. So when you get as far as we were here, you're starting to think, okay, let's see, that's 62,000. You need to know that you need to have you need to look at that 62,000 and go, I've got to have at least 62,000, or I'm going to hear about it from possibly affect my state aid. If it affects my state aid, I don't get my system grant. I would plan on levying at least that much unless there's something catastrophic going on in your community. Property tax values have dropped 20%. You know, the city is 2/3 smaller than it used to be overnight. This gives you, this 3-year rolling history kind of gives you an idea, and you can see that they've been moving up. You need to at least think of at least 62,000. And if not, and if it's 62,000, then I'm not carrying over as much as I was in prior years. So maybe I need to make that 63.5. I'm building my narrative. We'll talk about next month. So a mill is 1,000th. On the city can give you, if you look at the budget form that we talked about at retreat, you'll see that there is a valuation listed on that front page. Take that number and multiply it by maybe 2%, or at least do that number. And then take it times 0.001, and you'll get the dollar value of a mill. And then you can take that big number, that 62,000 or whatever, and you can divide it by that dollar value of a mill, and you know basically the number of mills you're asking for. Let me put, you have to be aware at the end of where you are. So if I'm levying 5 mils worth of money and it got me $62,000, I don't want to ask for $85,000 and jump that puppy from 5 mils up to 9. Because you're going to watch people fall out of their chair in a dead faint and then get up and race and shake their fist and carry on like mad. But if 5 mils, if property values have gone up slightly and I levy 5 mils, I'm going to get more than 62,000. We're going to talk about this in detail next time, but I want you to understand how you get to this tipping point for what I'm asking for in terms of money. Those motor vehicle things happen. You get what's spent. In other words, whatever people tag, you're going to get your piece of that. That's a given. What gets argued about is not vehicle taxes. What gets argued about is property tax on real estate. And so I'm wanting you to figure out everything else and leave that little piece for last. Now, I'm going to show you some samples real quickly here because I have a whole minute left. We're going to do lightning round. What this person did in this budget is they color-coded their budget. So they said, if you notice, they have a general fund other, which just means everything but tax in dollars. General fund tax income, employee benefit fund, and capital improvement fund. So they have a cash balance in all of those. And you notice they have no money left over in the tax fund. Now this could be all one checking account between the 2 general funds and the employee benefit fund. That's usually one checking account. Capital improvement, something else. But what they did was they color-coded it so that they could start building the narrative of what the tax dollars pay for and what the other money pays for, okay? I have several examples here, and you just might think through how that works. So, okay, there. This is somebody who just did a straight budget. They listed income and expenses. They didn't do that. They put the, they didn't have, they had the carryover at the very top and estimated carryover at the bottom. These are examples of people's things that have been turned in over time. This one only looked at 1 year, but then had these color-coded things about, you know, the comments. And you might take the comment piece of this. It's just examples. This one had projected. This is kind of how I think you should report to your entity. Whatever gets put in your budget is in that first column. Then you have the current month, year-to-date, percentage, and dollar remaining. I think you should do this
And
way.
Laura, there's a question about getting these actual spreadsheet files from the pictures you've got. Do you still have those?
I'll get them up in the next, you know, I probably will take me a while to round them up, but I will get these up and put them in Excel, okay?
And we'll put it on the Apple.
Yep, and I'll put them up on the Apple pages.
Okay.
So, homework. I'm 1 minute long. Oh, shoot me. I want you to cash flow. This is where you rub your head and go, how much money am I going to have left at the end of the year? And so I just want you to walk through that same process and look at the prior year and the current year to get that beginning cash flow basis. And you're not going to be really good at this in the beginning, quite honestly. You do it long enough, you'll get better every year. This is your first year or second year of this. You know, it takes a while, but you'll get closer and closer and closer as time goes on. And I want you to start creating that 2019 budget because we're going to do something with it in the next webinar. So I put these up, and I don't know, I may take them off of what we save. I love Dilbert. And, you know, and there's, you know, Jim, that there was one that had about signing something, you know, and Jim always used to laugh. Of course, he had a Dilbert tie. Jim Angus did at one point in time. It is annual, it is continual, and you might as well smile and enjoy it because it's your life. That's what directors do. Yeah.
And Kim pointed out that in Seckles, libraries are required to spend all of their system grant by the end of the year as well. So
right.
That's
right.
going to change based on what system you're in.
Right. But you should have, in other words, if you had, you know, if you like what you had in the bank at the end of last year, then you're just going to go, I'm not going to spend more than I receive in the current year, and you'll still have the same amount at the end of the year. If you just, you know, it's like your checkbook. You just don't, you just put you start with what you get deposit from your salary, your checks, and then you subtract what you have for expenses. And then you have that $150 or $200 you bury in there so you don't have an overdraft. It's the same sort of principle. Don't hesitate to email me, to telephone me. If you email me and if you haven't heard from me, call me and say, check your spam, because my Gmail sorts things oddly sometimes, and it, you know, I will try to respond and answer your question. I have looked at your things, and I will be putting my comments up about the budgets that you have given me already.
And in much the same way that everyone uploaded their budget, and I cannot say how happy I am that everyone had it in on time. It was very exciting. You may be the first class that's ever done that. So yay!
I think you are.
There is a new assignment up on the Moodle page that will take the cash carryover information in your 2019, start on your budget, and you just upload those in the same way. Or I did put a text box if you just want to tell Laura if you don't have a cash flow document of your own. Can we get a t-shirt because we were good on the first homework? I don't have a problem.
I don't either.
Yes. We'll have to see what we can figure out. But the mechanism is going to be about the same. You'll just upload your file, or you'll type into the box if you don't have a file for the cash flow. So yeah.
And for those of you that are really a little bit ahead of this, you can start fine-tuning that 2019 budget, and also you should start thinking about what is the conversation, what is the story I'm presenting to my entity. Remember, you don't want to you're not going to just give them numbers. You're talking about the community. So it's time to think about those stories of people that got some benefit from what you do at the library. It's those anecdotal stories that are going to help you get what budget you want. And start thinking about who's related to who. And you know, like I told you, I'm sure I did, I say it all the time, when my son was on the city council, I just flat told him his responsibility was to approve the library's budget or he was out of the will. And I meant it. Of course, there's nothing in the will, so it wasn't any big hairy threat, but you know, I just let him know I was paying attention. And it's okay to do that. So have a good week. I'll see you in a couple weeks. And don't hesitate to get in touch with me, okay?
All right. Thank you, Laura. We'll be back here in 2 weeks. Same room, same Zoom stuff. Thank you all for paying attention, and we'll see y'all next week. Bye-bye.
Bye.